Barron's Roundtable, sponsored by Global X ETFs.
Welcome to Barron's Roundtable, where we get behind the headlines and prepare you for the week ahead. I'm Jack Otter. Coming up, markets climbing on rate cut optimism. Oakmark's Bill Nygren on three great companies whose stocks are surprisingly cheap. And later, high mortgage rates are hitting the housing market hard, and the Fed's presumed rate cut next week may not be a quick fix. We'll break down why. But we begin with our expert panel and three things investors ought to be thinking about right now. On the Barron's Roundtable, my colleagues Ben Levison, Ali Coram, and Andrew Berry. So, Ben, last week we wondered out loud, could the AI trade be dead? Mr. Market gave a very firm answer this week that it is not.
Oh, it is not dead. Oracle came out with earnings on Monday afternoon after the market had closed, said some nice things about how AI was still live, it was going to spend a ton of money, and that was all the market needed. NVIDIA was back. I think it was up close to 16% this week. Semiconductor stocks were up about 10%. It was just a fantastic week for tech generally, but it was also a pretty good week for all the other stocks, too. I think about 390 of the S&P 500 stocks were up this week. That's partially because of optimism around the Fed. But when you step back, Magnificent Seven were up about 7%. The NASDAQ was up about 6%, had its best week of the year. S&P also had its best week of the year, up 4%. The Dow brought up the rear 2.7. It was a great week, except for a tiny little hiccup on Wednesday after the inflation report.
So, Ali, we are graced by your presence, a special guest from Investors Business Daily, our sister publication.
Sure.
And you really look carefully at the charts. So what were the charts telling you as that action was happening that Ben was discussing?
Exactly. What a 180 from the first week of September, right? And things really kicked into high gear on Wednesday. We saw an outside day upside reversal, and that is very powerful, a bullish signal, meaning the low and the high of the day totally engulfing the prior day. So the S&P intraday was down 1.6% on Wednesday, but came roaring back, closing up with a 2.5% swing by the end of the day. So that was a momentum shift. Absolutely. And your expectation is to see continued strength, and that's exactly what we got Thursday and Friday.
Momentum at a reasonable price, as you guys call it. Mark. So, Ben, now we got the Fed set up. What do you see happening next week?
Well, if you had asked me this a couple of days ago, I would have said the Fed's going to cut rates by 1/4 point. But then we got a story in the Wall Street Journal from Nick Timrose, who's kind of seen as the Fed whisperer, talking about this uncertainty around whether it'd be a 1/2 point or 1/4 point. And now the odds are of a coin flip. And so we really don't know. We know we're going to get a cut, but whether it's going to be that 1/4 point or 1/2 point, that remains to be seen.
Yeah, I'm in the 1/2 point camp. I don't know why the Fed doesn't go a 1/2 point. The short-term rates at almost 5.5 are an outlier now, with most interest rates under 4%. Given where inflation's running under 3, I think there's no reason the Fed can't get can't do 50 basis points and get the short rates about 4% in the next 6 months.
Yeah, see, Andrew, I agree with you on all that. The one thing that makes me think maybe not is that the history of 1/2 point cuts is not great. Usually it's a sign of a recession, and usually the markets sell off, and I think the Fed knows that, and I'm wondering how they would explain it. So it's going to be very interesting when we get the rate cut on Wednesday.
One way or the other, rates are going down, Ali. Barron's got a story coming up this weekend about how you ought to be investing in stocks in that falling rate environment. What are you seeing there?
So I think the key is going to be what's the market reaction next week. We know a cut's coming, how big, but at the end of the day, what's the market going to do? Are we going to need to lean more bullish or bearish? I think if you gave me the headlines ahead of time, I'm still not going to know how to trade it. So with that being said, I think we should look at stocks like Royal Caribbean. This is a cruise line, of course, and in a low rate environment, that's great for shipbuilding. I like buying stocks in uptrends close to key moving averages, and a lot of technical traders look at the 50-day line. So Royal Caribbean's about 5% above the 10-week line, really snapping back from the prior week. So I think it's in an ideal setup.
Also, when central bankers get dovish, gold bugs get bullish. What do you see there?
Yeah, there's definitely an inverse relationship between bonds and golds. And so when you see yields falling, and I think actually investors now are already anticipating next week, you see gold outperforming not only this week, but if you take that step back, all year long, especially starting in July. So one way to play it is with Newmont, a gold miner. So pulling back to its 10-week moving average, another technical level we like to look at, seeing a strong bounce from there. So one to watch as well.
Yeah, and gold hit a new new high on Friday is over $2,600 an ounce, up about 25% plus this year, beating the S&P 500.
Andrew, back in July, there was a debate between Donald Trump and Joe Biden. Some people are aware of that. Disaster for Biden. You came on the show and reported on some of the Trump bounce that we saw in the stock market. This week, different story. What'd you see?
Well, I mean, it looked like that Kamala Harris was pretty much the clear winner. You saw the odds of her winning the election rise on some of the betting sites. And so she's now a slight favorite to win it, even though the polls are somewhat mixed. You saw strength in green energy stocks, which would benefit from another 4 years of a Democratic administration. There's a First Trust green energy ETF that was QCLN, up about 6-7%. Some of the renewable energy oriented utilities like AES and NextEra were higher. And you saw some weakness in the managed care stock, Humana, which might be a loser if you get another 4 years of the Democrats in the White House.
Gotcha.
But there's a big difference, I think, between this reaction and what happened after the first debate. Then we had a really sustained trend in some of these stocks that would benefit from a Trump presidency because it looked like we were going to get that Trump presidency and perhaps a Republican sweep. This time, we had a bounce. I think it was mainly some short covering, and it didn't follow through, and that's a very big difference.
And all of this will change 16 times before November 5th. Thanks, guys.